I remember, when I built my first startup back in 2002, which was just at the tail end of the dot-com boom and bust, you know, if you had $100 million in revenue, you were a great candidate to go public. These now are companies with billions and billions of dollars of revenue that are choosing to not take that path.
And they're still choosing to stay private, right? These are enormous funding rounds that are coming and staying within the private markets, which means that if you think about the excess value creation that used to occur after a company went public, that value accretion, it went to all of the public market participants who were investors in those companies. When Microsoft went public, it had an approximately $800 million market cap. That's wild if you think about how much additional value has accrued to investors in the public markets post its IPO. And then if you think about companies in the private markets now where the values, they're $100 million values that are still private companies. And then if you think about when those companies do go public, at some point, presumably, I think there's at some point where they will need to provide liquidity to their early investors. And so all of a sudden they are going public perhaps for a different reason. They may continue to raise capital from the public markets. I think it's possible that at some point they will have a need for capital that exceeds what's possible in the private markets, although I continue to be shocked at how much capital is available in the private markets.